Well, I think it's yet another one of these teases that the ECB deliver once every few months. I mean, I think the backdrop to this latest indication of additional stimulus is obviously a substantially deteriorating fundamental story for the Eurozone. As you remember, the IMF have assigned a reasonably high probability of another recession next year, and a meaningful probability or risk that the whole Eurozone slips into deflation. So I think the risks now have sharpened somewhat. And expectations subsequently have increased. So the indication that the ECB may increase its balance sheet by another €1 trillion or so obviously is being received positively by the market. There is a huge amount of uncertainty about how that's actually going to be delivered, because there is the sense that this will eventually have to extend to sovereign risk, sovereign debt, and there's still some political roadblocks to that happening. But I think increasingly the market's now going to look for the fine detail to be delivered probably in March rather than December. And so I suspect that the upside of this is going to dissipate reasonably quickly until we get some more details. Well, it's an absolutely fascinating experiment, as I think you rightly suggest. Basically, I think we should look at all this through the prism or through the experience of the US dollar. If we do, in fact, start to see further yen weakness and euro weakness, caused by their respective central banks seeking to stimulate, then obviously that entails a substantially stronger US dollar. And that usually has quite a negative effect on emerging markets, or at least has done over the last 20-30 years. You'll recall the very strong US dollar we saw in the 80s took down Latin America. The very strong US dollar we saw in the 90s took down Asia. And I think there's an awful lot of concern and speculation as to what might be the impact of a substantially stronger dollar going forward. So already we are now reassessing and reprising the impact of the weaker yen between 94 and 98 on the Asia region, and what that meant for terms of trade shocks, relative levels of competitiveness. Already the yen has weakened some 40 to 50% since 2012. If indeed that's pushed a little higher and dollar yen can tick up to, say, the 120 area, I think it has profound implications for the Asia region, and obviously one that we're looking at very closely.